Hi, this is Aaliyah with Investors in Action, and I wanted to share with you something a little nerdy, and it's the numbers involved in real estate. Now, numbers are a key factor to your success. You might have heard of the financial calculator. If you learn how to master that, that is a tool of gold. I'm going to break it down to a couple specifics here. I look at commercial real estate, and one of the numbers that's really important for us in commercial real estate is the net operating income. Now, what the net operating income is, it's the income that comes in after you calculate your expenses, but before taxes and before your debt. And what that number represents is your overall income for the property that you're getting month over month, year over year. Now, another important calculation that is very common in commercial real estate is called the cap rate. So what the cap rate does, you're taking the net operating income and you're dividing it by the value of the property, what somebody would pay on the purchase price if they're purchasing that property. And that's called the cap rate. So when you're buying or you're selling real estate, what's important to know is what the local cap rate is for the asset that you're selling and in the general region in which you're selling it. For example, if you have a hotel that you're selling and it's on the boardwalk of, prime real estate overlooking the ocean, you probably wouldn't compare the cap rate to, let's say, something that's 100 miles inland and in not such a nice area. So you want to make sure you're comparing apples to apples when you're comparing cap rates. The other thing to consider is making sure that the asset classes are the same. So a cap rate for a mobile home park might not be comparable to a Class A real estate investment property such as a mall or an office building that's located in a downtown area. So you want to make sure that the cap rates are solid and comparable. Now, other numbers that you're going to want to take a look at are your management fees. And those are oftentimes have an industry average for your overall gross income. So for example, if your gross income on a property is $20,000 a month and your typical asset class, let's say it's an office building, let's say your overhead is 50%. Now you'll want to compare that to what the industry average is. Maybe you're looking at cost per square footage, and those are important numbers to take a look at. So always take a look at the numbers, compare it to what's in the asset class that you're looking to purchase or sell, and look at what the local market dictates. And you should have a much better idea if you're on target for the value that you're looking for or the value that you're selling at. One final piece of advice when it comes to numbers is if you're looking to buy a property, you got to look at your debt. And the cost of debt, meaning how much are you spending to borrow money? Are you spending at a rate of 3%, 5%, 10%, 15%? There's a lot of numbers that can go involved. And a lot of times when people are purchasing distressed properties, meaning they either need rehab or they have low occupancy or there's just something major that needs to be turned around on the property, typically traditional financing from a bank may not be available. So you have to make sure that if you're working with other investors that you're providing an interest rate that suits them, or you've got some sort of structure where maybe they get a percentage of the upside, and that might be considered an equity partner if you structure it so that they also become an owner and get a piece of the pie. So all of those are your numbers. Hopefully you enjoyed this nerdy little topic, but it's a critical topic to your success in real estate. Thanks so much.